So a very prominent investor today just closed their short bond positions. So this means that this investor thinks that interest rates are likely going to continue lower like they have in the past, trading session. So this is Bill Ackman here, CEO of Pershing Square. He is a huge, huge investor on Wall Street, and he just covered his short bond positions. So this means, like I said, that he thinks rates are likely going to fall. And his reasons were there's too much risk in the world to remain short bonds at current long term rates. The economy is slowing faster than recent data suggests. So, if the economy were to kind of falter, that would be a good news on the Powell front, on the Fed front, right? Because that would force the Fed to cut rates earlier, right? So, if the economy is strong, they're going to continue to raise rates. So, this could be a pretty good time to get into TLT and other bond ETFs. So, one of the largest investors of the entire world is covering their short position on bonds. Also, it's worth noting that we saw Charter Worth, Carter Worth. He is a big investor as well. He had put out that he thought that from a technical standpoint, it looked as if rates were likely to pull back. And I'll play that video for you right now.
Really is characterized the bullish year that wasn't. I mean, the Russell 3000, right, which represents 98% of the investable capital in the U.S., is up 8.9%, the index, but the median stock is down almost 7. 60% of the stocks are down. It has not been a bullish year. Hard stop. But anyway, let's go to gold and let's look at some of the charts and rates and so forth. So obviously we're right now on the 1-year anniversary. It was a Friday. It was October 21st, 2022, and rates hit a high of 4.34% before dropping all the way back down to 3. And then here we are now 1 year later at 4.9. Look at this chart, look at the channel, and look at the second, which picks up the chart going back from the prior high. So again, 1-year anniversary, Friday, October 21st, here we are, Friday, October 20, 4.34, and here we are at 491. The question is this sort of where it gets overdone? I think so. But of course, I've been making that case, and it's continued higher. I'm a buyer of bonds, plain and simple. But gold.
And then let's take a look at the chart ourselves. So I won't draw that ascending channel that he did, but we can see some topping out at around this 5% level. So over the past 3 trading days, we've topped out at this 5% level for interest rates. I believe this level likely continues to act as a top, and we get somewhat of a pullback, at least down to 4.5% for interest rates. So thinking that we get a pullback for interest rates in the short term here. And then really a large part of that is going to be based on the economic data that we get this week. So on Tuesday, we get services PMI. On Thursday, we get GDP numbers. And on Friday, we get the PCE numbers. So PCE, for those that don't know, is a measure of inflation. It's basically the Fed's preferred measure of inflation. So projections are for 0.3% rise in PCE. And last month, we saw a 0.1% of a percent rise in PCE. So we're projected to have a pretty sizable jump in this next quarter. Actually, in this next PCE read. But in my opinion, I think expectations are too high, and I think we're setting up to beat expectations, right? If we're already projected to see a 0.2 jump in inflation, if we go in line or slightly below, we're going to see a pretty big jump from the markets, right? Because higher inflation causes the Fed to raise rates for longer. If we get a lower than expected inflation print, it causes the Fed to maybe even cut rates earlier than expected. So from the economic standpoint, I think we're set up to kind of see some results that would force rates lower. And that's all happening in this next week. And then we can see here for the next policy meeting for the Fed. So on November 1st, we're projected to have no change in interest rates. So 98% of market participants believe that interest rates will likely stay unchanged. And just roughly 2% of the market thinks that the Fed will lower rates. And then if we look out for the next meeting on December 13th, we see that the Fed will likely keep rates steady, right? They're likely going to keep rates where they are. So 75% of the market thinks the Fed will neither raise rates or drop them. They will just continue to pause. And then 24% of the market thinks the Fed will likely continue to raise rates. And 1.2% of the market thinks the Fed will likely lower rates. So overall, definitely a wide range of opinion throughout the market, but definitely signaling that rates are likely to not move higher over the next couple meetings. And then for the January meeting, most of the market participants are expected rates to stay the same. So overall, it seems as if rates will likely stay the same or move slightly higher. Personally, my opinion thinks that I would agree with Ackman here that economic data will likely continue to come in lower than expected, which will help the Fed and kind of enable them to cut rates sooner than the people would expect. If the Fed is cutting rates, that's obviously going to help bond prices. So that would obviously be a positive for bonds. So, like I said, huge economic data coming up. We also have GDP coming on Thursday as well, with a 4.5% projected read. I think this is a bit high. The last GDP read was at 2.1, so projecting a pretty good jump in GDP. I think that's a little rich. I think this projection is a bit too lofty, and I think we likely come in lower than GDP expectations, which would actually help the market because what the Fed does is actually more important right now than what the general economy is doing. So if we get a lower than expected GDP print, that will only help the Fed. That will only make their job easier. And like I said, I think PCE comes in lower than expectations this week. So with all that being said, covered a lot in today's video. If you could leave a like and subscribe, it helps out the channel a bunch. Would appreciate it. With that being said, though, I will see you here next time.
Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock and option markets. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio to help optimize your assets to meet your personal financial goals. Additionally, to better assist traders when searching for setups, I'm selling trading bots which will give you buy and sell signals and tell you how your trading strategy has performed historically on any stock or cryptocurrency that you're researching. Finally, if you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.